Joining us now, we have Lee Harris. She is a writing fellow for the American Prospect and has a great new piece. Let's go ahead and put it up on the screen, titled What the New Sheriffs of Wall Street Can Do, taking a look at both some of the new regulators who've been put in place and also some of what the new risks in the banking sector are. Lee, welcome. We're glad to have you.
Good to see you, Lee.
Thanks. Really excited to be on.
Of course. So let's build a story from the ground up. Start with who the people and the players are that you write about here.
So I write about a number of new financial regulators that Biden has put in. So there are kind of big names like Gary Gensler, who was actually pretty well known as someone who didn't play ball with industry in the Obama administration. He's now leading the Securities and Exchange Commission. But he has a lot of really promising people under him, like his policy director, Heather Corzo, who is at the AFL-CIO, and some real critics of climate risk as well, who are concerned about how fossil fuel crisis could undermine the financial system. Then there are other people like Rohit Chopra, who was previously at the Federal Trade Commission and who's now heading up the Consumer Financial Protection Bureau. He's a real critic of some of the abuses of big tech and a real kind of antitrust champion. And then there are kind of people throughout the administration. I mean, another person who I write about is Graham Steele, a huge kind of antitrust advocate and critic of giants like BlackRock, who is pretty high up at the Treasury now. Now, not every new person who's been appointed as a financial regulator is a critic of Wall Street. And in fact, the kind of interesting dynamic is that there are a lot of appointees who have been drawn from the Fed, and there's, I think, real fear about the Fed's institutional conservatism coming in and kind of stymieing some of the reformers who want to be tougher on Wall Street. So it's definitely not a done deal, but Biden has put in kind of a number of surprisingly big critics of Wall Street.
You know, Lee, one of the things that I get from your piece is just how complicated some of the current financial technology has moved, and how so much of it is a total black box of regulation. So you talk about fintech, about crypto, about, if you can explain this to us, what SIFI, I think it's called. Can you explain some of those more complex technologies and then where the regulatory aspect might come into play?
For sure. So one kind of weird dynamic I talk about is the way in which banks, big banks and conventional banks, are the villains, but you know, in the way that a lot of these regulators have said since 2008, and they certainly need to be regulated more forcefully. But also, surprisingly, a lot of financial risk has migrated outside of banks, into big tech companies that are producing new financial instruments, and also into kind of the new shadow banking system. So, if you think back to 2008. The shadow banks were kind of on Wall Street. These broker-dealers, which weren't subject to prudential regulation, to any of the regulation that banks had to comply with, they basically copied the bank business model in this huge act of regulatory arbitrage, leveraged themselves up, and then proceeded to blow up, and everyone knows that story. But now, in the wake of that, there's this funny dynamic where the banks do have a number of new guardrails that have been put on them, like capital requirements. And Dodd-Frank, which was that big piece of post-2008 regulation, it's true that it didn't go far enough, but it has required banks to have kind of more of a cushion in the event of a crisis. But meanwhile, big asset managers like BlackRock and hedge funds, but private capital that's completely unaccountable to regulators and where there's even less transparency than we have in the banks, they've been taking on new forms of risk, really outside of kind of the regulatory perimeter of what regulators are studying. So that's all a kind of long-winded way of saying that if all that these new regulators do is come in and regulate the big banks, they'll be missing a lot of the picture.
Interesting.
Talk a little bit more about BlackRock specifically, which you single out here as particularly important and influential. What is it about them that makes them so significant and such an important target for additional regulation?
Yeah, I'd say it's both their sheer size, their market power, and the amount of information they have on the market, and then their political influence. So just to go through that, as of, I think, 2019, BlackRock itself held a 5% or greater stake in 97.5% of S&P 500 companies. So it has a huge amount of influence with all the major companies that investors are buying. And it also operates, so just the amount of concentration itself is huge. But But I think what regulators are more worried about in some ways is its political influence and its insight into it. So it operates this technology platform that's really worth looking up called Aladdin that has trade and ownership information for about 10% of global stocks and bonds. Basically, it has visibility that's kind of unrivaled into its rivals and into financial markets generally. And that's one reason that the Fed hired BlackRock to manage its corporate bond buying programs during it as part of the pandemic response. And that put BlackRock, among other things, in the position of buying its own ETFs. So there was a lot of criticism of that as kind of self-dealing, but even that maybe misses the bigger picture, which is just the sheer amount of information that makes BlackRock really hard to compete with. And then finally, it has kind of political influence on a more personal level in a kind of revolving doorway. I mean, BlackRock CEO Larry Fink advised President Trump last year on the U.S. COVID response. The Biden administration is certainly stacked with BlackRock staffers. So there's just so much interpenetration between this sprawling asset manager and the government.
And so would the idea be additional regulation, or would the idea be to break up BlackRock?
That's the thing. It's kind of an ongoing debate among regulators. So this guy mentioned, Graham Steele, has written not just about regulating BlackRock, but actually enforcing antitrust law against it. But there's kind of a debate over whether these really influential non-bank institutions should be given this SIFI designation that you mentioned, which means systemically important financial institution. That's basically a too big to fail designation, or if they should just be broken up. And it's an interesting debate because FSOC, which is the committee where kind of all the U.S. financial regulators come together and try to coordinate a coherent regulatory strategy, that's the main tool it has at its disposal, is designating entities as too big to fail. But it hasn't really taken advantage of that tool. So there's an argument that they should do that not only for big banks like Citigroup and JP Morgan, but also for insurance companies and other financial giants that have a lot of market importance, but that aren't regulated as stringently as banks. But others say, right, that it's not enough just to call something too big to fail, and in some ways that would institutionalize its power and make it, that there are basically hazards and risks with calling something too big to fail, and that instead these groups should just be broken up.
Absolutely. Lee, I mean, this is a very useful intro into how all this stuff works. There's a lot of chatter online, but this is an actual deep dive. We'll put a link in the description, and we really appreciate you joining us. Thank you.
Thanks so much.
Our pleasure. Thanks for watching, guys. We'll have more for you later. Hey guys, thanks so much for watching.
That's right. Just as a reminder, you can become a premium subscriber today. Watch the full show completely uncut, our reactions to each other's monologues. You get to listen to it, you get to ask us questions, all that good stuff. Link is right there in the description or at breakingpoints.com.
Best of all, great way to say screw you to the mainstream media.